Hello, everyone. Good evening. Good evening. Please let me know if I have to say good morning to some people. Hi, Krishna. How are you doing? Okay. Hugo said here is good afternoon. Nice, nice. Great to see you two guys. Thank you so much for your kind words. Appreciate it. So, first, where are you guys watching us from? Come on, let me know. Where are you guys based? We started here from Portugal, Krishna, UK, London, Stefan from Palma. Panayotis, your name and your surname made it, just said it all, and you are a Greek guy. Because I'm also Greek Cypriot, that's why I can resonate. Of course, welcome Panayotis, thanks for joining us. Jerome, Netherlands, it's always good to be here. Ericsson from the UK, Ziga from Slovenia. Oh, Diggins, hey coach from Canada. It was a pleasure, and it's been a pleasure working with you, Dickens, and see how you progress in trading. Absolutely. Yes, Panayotis. I'm based in Cyprus now. Riete from South Africa. Nice. Pascal from Belgium. Hi. Guys, who is here for first time? Let me know. Who joined us for first time? Fanny said, hola. Because, yes, we do market analysis here and predictions and all this stuff, but I also try to explain you how do I trade on a weekly basis, on a daily basis. So if you tell me that you are for first time here, it's going to help me to understand, just not to just, let's say, start explaining again some things. So Balalo from Oman, first time, nice. Deacon said, getting better every day. You are the best coach. Oh, thank you so much for your kind words, mate. I really appreciate it. And again, it's a pleasure working with you. Absolutely. Pascal said, first time here. Ericsson, first time. Very thank you. Dylan, first time. Awesome. So, guys, myself and the Elevating Forex team, of course, would like to welcome you to another weekly webinar here, just exclusively for you. So, as usual, for the general information, this content is for educational purposes only. Now, for those, Fanny first time, GND said first time, Panayoti said I'm also first time here and I'm excited for this webinar. Nice, fantastic. I'm also excited to be with you guys here. For those they are wondering if maybe I'm a real person or not, I think I look like the same, that guy on the picture, yeah. So my name is Theo. Allow me to introduce myself for those they join us for first time. Theo Theodorou, I'm on all social media, as you can see here. Okay, so why am I here and what's my expertise and experience? First, I'm a certified financial technical analyst, so I'm not a YouTuber, although I make my webinars a bit fun, but yeah, I'm not a YouTuber. I'm a certified market analyst. I hold the certification by the Society of Technical Analysis from the UK, from London. And also, I hold another certificate as a certified market technician that issued from the International Federation of Technical Analysis. So I take my trading into the next level, and you don't need to be a certified market analyst to do to be able to trade. But because I'm passionate about trading, and this is my career, if you want, so I expand my knowledge and my skills in technical analysis as well. I do trade for the last 12 years, actually, and I specialized in currencies, indices, commodities, cryptocurrencies, and CFD products, as well as futures when it comes to technical analysis. The only difference with futures is that the lot sizes and all this stuff. On a daily basis, besides my trading activity, I also deliver market analysis for hedge funds and for prop firms. If some of you are trading with prop firms account or something, I deliver market analysis for macro analysis, what all the events are about to be reported in the market and how they're going to affect the currencies and commodities and our trading activity the entire week, as well as detailed chart analysis that is relevant for the day. I also published articles in financial magazines. I trade a lot the crude oil, to be honest. That's why I'm specialized a little bit more in the crude oil. And many of you, perhaps you happen to see me in some webinars that I host. Exclusive webinar was with John Bollinger, the gentleman who created the Bollinger Bands, which we can access them on all platforms for free. It's the guy here. And also Steve Ninson, the gentleman who introduced us to the candlestick patterns like Beyond Candlestick in technical analysis. That's the gentleman here. And other great guys like Alex Spiroglu, like David Cooling, John Fraser, and many, many other more. So enough with you, Theo. Introduce us to the charts now, okay? So, Fredly Fred said, hey, bro, how your weekend has been blessed? Absolutely, I hope yours too. So we are about to start with the market analysis. Now, did anyone, it happened to be on the previous webinar, by the way, when you say good evening to me, I know that you were here last time because it happens and I remember many of the names. So I hope that slowly you will start taking the trades based on the setups that I explained here. I understand, yes, Avia watermark, of course. Here it comes. So I understand that sometimes you need a little bit of more confidence in order to place trades yourself. Our traders, they do exceptional job when they send intraday setups day in, day out on our premium channels. But what I teach you here is how you can trade yourself if you like and if you want. Okay, so please try to understand the trading approach that I use. I do this for many years. If you sit next to me while I'm trading, I do the same thing like what I teach you here. Okay, so for the Euro US dollar last week, is that okay with you guys? For the Euro US dollar last week, we said, actually, before you leave the webinar last week, didn't you remember that we make it very clear, guys, please, for next week, for the next week onward, please make sure you focus on the major currency pairs. It's been 2 weeks since we experienced good moves on the major, but the euro, for example, was sitting on a weekly support with a reversal price action, and it happened, and the overall weekly trend was up. So on the hourly time frame or on the 4-hour time frame, we would like to look for long positions. Okay, so starting, let's say, Monday, we wanted to find a ways to enter long in the market, and there were heaps of this one, no, but here there were heaps of trading setups we could trade. I've shared with you guys the candlestick price action that I use primarily, bullish and bearish engulfing, as well as long and short lower wick candles. That's how I enter the trade. I don't do something mystical. I don't do something magical. I just do one simple thing day in, day out. And for those that they sometimes they find it a bit hard to understand exactly the way I trade, okay, or they need some more support, allow me to show you the last few trades I placed in my account. Okay, just to understand how powerful is history. Okay, let me find it later and I will share it with you. But what I aim when I trade is for a high reward to risk. Are you with me? Do you understand what I'm saying so far? So we need to aim for high reward to risk if we want to trade successfully the retracements, like price moves up, it comes down, we enter a sniper, we get a sniper entry and we go for long in an uptrend. Okay, so we went a little bit on outside of how the markets move on the euro US dollar, but nevertheless, it's also important to educate you throughout these webinars. Okay, now the price made a directional move to the upside. What we saw happen here is that the price didn't manage last week to penetrate these previous high areas. Why? Because the sell orders, they were a bit significant at this point. What can we understand from this one? We understand that maybe the buying pressure is not as strong as expected to be, as it was from this point to that point here. Now the market didn't manage, although it tested the resistance, it didn't manage to penetrate it. And sometimes this is a hidden hinge by the market that, hey, I came up to here and I didn't push through. Maybe I'm not going to be able to do it next week. So here we need to be a bit patient and understand that maybe the market will postpone its upward move. Okay, what happened though a couple of weeks ago and also this week with the Fed, the interest rates in the Eurozone and the interest rates in the US, they both been carried. So these two currencies now, they became weak currencies across the board based on that only. So sometimes when we identify the weakness in both currencies, it's maybe better to avoid them and focus on currencies they have significant strength differential. Like, for example, Great British Pound against the US dollar. The Bank of England last week kept interest rates the same in the UK, while the Fed dropped interest rates or cut interest rates. So we saw that the pound US dollar broke above this resistance. But before that, we explained that, hey, we are looking for long positions because there is a bullish price action here. Now, from next week onward, so from Monday onward, in this one here, we do expect continuation because the price managed to break and close above that resistance. If we go on the hourly time frame, there were a few price action confirmation, like this one here. I think it was on Thursday. Yeah, on Thursday during the New York trading session, the price moved upwards. It made a higher high and it came backwards with a bullish strong candle around the support, entry here, stop loss there, and it was off to go for at least 2-to-1 reward to risk. Now, last Friday, bullish engulfing here, entry could have been there, stop loss around there, and let's see if the price is going to move upward and it's going to give some reward to risk favorable. We don't know. It's something. I see many people, they go back to history and they say, hey, if this happened and if that happened, they refer to what already happened and they don't have the courage to say, hey, this one also, it's a promising setup. We don't see the result yet, but that's how we do it as traders. As traders, we don't know the outcome. So we have to be, we have to have a courage and we have to have faith in our trading plan and our abilities to trade. And yeah, maybe we're going to get it wrong. Most of my trades, they are or even half of the trades, they are losing trades. But because the minimum reward to risk I go is 2 to 1, then always my account is growing. And most of my accounts now, they are prop firm accounts. So they just growing because of the reward to risk. Okay, it's not something mystical to make it as trader. You just need to have the right guidance. You just need to have the right coach, if you prefer. I offer coach, private coaching. Some people like Deegan, it's here. He can share experience with you if I'm good or not, and you can judge. If you need some help, just reach out. I used to have coaches for so many years in my life because it's like a professional athlete, right? Can you be a professional athlete without an assistant of somebody that's experienced and it went through? I think it's not very smart idea. I have a good friend. He is going for Olympic Games, okay, and he's on his 30s now. And since he was 16 years old, he has a coach. It doesn't mean because he's a very good at the sport he does, he get rid of his coach. Same with me, same with everybody else. Okay, so don't think that it's something weird in trading to have a mentor of a coach. So US dollar, Japanese yen, it's one of the currency pairs that I will keep my attention next week because the weekly chart came at this area of support, the price on the weekly chart. It created the bullish price action, bullish engulfing. And after this candlestick appear, we expected the price to move upwards. So how do we trade this one? The strategy, the methodology, it's the same. I go down to the hourly or 4-hour time frame, whatever works best for you. For me, hourly is fine because the times I'm watching the chart, they offer good opportunities on the hourly time frame. So I'm very, very okay with that. And we want to see this kind of higher highs and higher lows. Simple. Then we want to focus on the corrections, retracements. We find some areas of inside support or Fibonacci levels. We find the price action we want to see, the bullish engulfing or the bullish hammer, and we take long positions. This is how we trade. So you do have the currency pairs, you do have the strategy, you do have the entries. You just need to become patient and stick to the process. Next, any questions so far? George said, can you recommend data, book, or something where the main candlestick charts are explained? Thanks. Absolutely. I can send you some information. By the way, guys, if you want to receive those candlestick patterns that I shared many times, okay, you just let me know, and I'm very happy to share them with you. Okay, just send me a message, either myself, you can find me on Telegram, or you can send at support, Elevating Forex Support, and the guys, they will forward it to me. However, it's more easier for you. Jerome said, do you use any kind of volume indicator? That's a great question, and it's a lot of rumors about volume indicators. Now, I have some volume indicators I use for my when I do the analysis, like the unbalanced volumes. But on the other hand, when we trade Forex markets, CFDs, the volume is not real. The volume is not the actual contract that they've been exchanged on the counter, because each broker has their own data, and yeah, we take the pricing, it's pretty much similar on each broker, but what we see as volume number, it's actually how many times the people, they place orders, the clicks, we call them clicks. Let's say how many times you click the mouse. And that's the reality about volume in Forex. Unless you trade on either Sierra charts, Jigsaw, NinjaTrader, which they trade futures, and you have to pay subscriptions to trade this stuff. Okay, So about volume, it's better to master the candlesticks, and you will understand how to approach them. Okay. Nenad said you promised some ebook a few months ago. What happened with that? Yeah, the ebook went a bit south. Okay. It was a little bit of a conflict with the ebook, but I think it's fine. What I'm sharing with you, it's more than enough. Okay, so apologies for that. And yeah. So we keep an eye, please, on the USD Japanese yen. Let's mark it on our charts. We can look at the pound US dollar as well if you want. Australian dollar US dollar on the weekly chart. What happened last week? Of course, the price moved upwards as expected, but it reached its level of resistance and it didn't manage to close above. So it makes it a low probability bullish breakout scenario for next week. So I prefer to see on the hourly time frame on this currency pair the price to get outside of this consolidation pattern. So I will not try to trade this consolidation pattern. Let's wait for the price to break outside of this one. Yes, it's a continuation pattern, but we use stop losses. We can focus on currency pairs or instruments. They have high probability scenarios to play out. Let's wait for a real breakout above this one in order to continue looking for long positions. Okay, and you have to understand that in trading you need to master the market understanding, not what you want to trade. Don't try to satisfy your ego or your thought that, hey, the price was going up here and I didn't trade it. I saw it and I didn't take any trade. I saw this, I didn't trade it. I saw this, I didn't trade it. I saw this, I didn't trade it. And then you come here and you said, okay, I had enough. I'm going to trade here. You're going to try to revenge your behaviors. No, in markets, this one, it's a bad trading habit. Don't try to revenge your fears. You don't revenge the markets. You revenge your emotion. You revenge your thoughts that you didn't act upon them. Okay, and that's what's going to create more frustration, and that's going to create emotional distraction, trading distraction. I hope that makes sense. Next to Anne, it's going to be the pound JPY. Very, very strong currency, the sterling. It created this bullish candle here. Now it's approached a level of resistance on the hourly time frame, though the market made a very strong higher high. So what I will be waiting for is, there are few scenarios here. First, there is a fair value price. Some traders, they call it gap because it's not a gap, and I don't like to call it gap. Gap is when there is real gap between the price. Here, there is no gap between the price. It's an imbalance between buy and sell orders that they push this market upwards. Okay, so the price most likely it's going to come into this area here. There is an inside resistance, and it's something that you won't going to find it on any YouTube video. It's something that I teach on my private and mentoring sessions, and it's very powerful. Mark this: if the price is going to come down there and it's going to find support around here, it also matches with the 61.8 of the Fibonacci retracement. We can find some good positions to go long on this one. So let's keep an eye on the pound Japanese yen. Similarly, it's the euro, but what I don't like with the euro is that generally the euro, it's a weak currency. So the price made a higher high move and then it stopped. It didn't go anywhere. So we need to wait for some kind of market confirmation on the euro. So I will take it out of the list. Next one, USD Swissy. This one, it can be offered for long opportunities. Last week we said the price made a higher high here, a higher low there, and we can looking for long positions. So this week we do expect, based if we focus on this bullish long length candle with a long lower wick, we can focus, and most likely we can see some push to the upside. Although the Swiss franc was a strong currency, now it's expected to be a weak currency. Keep that in mind, that this week the Switzerland National Bank will report interest rates for Switzerland. And they are expecting to drop the rates. I think now it's 1.5 or 25, and they're going to drop them for about 25 basic points. You need to do special courses to understand what my handwriting on the charts, right? I write using the mouse. So let's make it better. 25 basic points. That's what we expect to see a drop on the Swissy. If this is going to happen, and at the same time, if the market will follow through, we're going to see a move on the upside, because if the Swissy it's going to get weakened, the US dollar it's going to be forced to gain momentum. On the hourly time frame or lower time frames, doesn't matter. What we want to see is the price from a level of support bounce and a bullish price action to take some long trades. That's how we want to trade this one. Let's keep that in mind. Last week it was very good opportunities on the euro sterling. The fact that we had this reversal price action here, but a round of support, we said, if you remember last Sunday, that we might not gonna trade this currency pair because we don't know if in the UK they will cut interest rates, which is going to make the sterling very weak. But apparently they kept them unchanged, and the market was just making lower highs and lower lows. It's this type of moments that we cannot know what to expect. Okay. Some comments here from Muratovic said, great presentations. Thanks. Can we touch based with Dow, NAS, and oil a bit? Yeah, definitely. We're going to have a look at those. Jerome said, just grab your crystal ball and tell me if the gold is going short on market open. Still have some positions open at 25.45. Are you martingale the gold, Jerome? What are you doing over there? Yes. What AKX? What do you think is going to happen with the gold? So I think, do I have anything here? I don't. I think from next time I will put a crystal ball in front of me and I will start doing some whatever they do there, just just to see how can we get away with gold. By the way, it's going to be a gold crystal ball. It's not going to be even clear color. Okay. You're going to send me one from Amazon. Okay. Awesome. So Euro Swissy, even Euro was a weak currency. The Swissy was much weaker and the price there went up. I'm not going to be I'm not interested on this one, to be honest. This, honestly, last week, the markets, they were very, very, very straightforward on the major currency pair. This week, the major currency pairs moves, they all played out really well. And the only one we're going to maybe be focusing on, it's going to be the USD Japanese yen. Then we're going to have, let's say, the USD Swissy because of the Swiss National Bank reported interest rates, as we explained, and the Great British Pound Japanese yen because the sterling it's strong and the Japanese yen it's a weak currency. Let me check this one. So Euro, Australian dollar, honestly, it's nothing here, only by looking on the weekly charts, and there is no clarity here, neither for direction, neither for price action. It doesn't make any sense to go down to, and actually, unfortunately, that's what many people, they do. They come on coaching with me and on private mentoring, and they tell me, Theo, I do this and I do that, and I'm thinking, how can you go to the lower time frame? Even if you trade on the 1 minute time frame, guys, you trade the 1 minute time frame. Before you go to the 1 minute time frame, you need to know, you must have first a higher time frame you are watching the market. Let's say you trade on the 1 minute time frame, get the direction from the hourly chart. If the hourly doesn't make sense in terms of direction and price action, there is no need to go to the 1 hour, 1 minute time frame and try to figure out what you're going to trade. It's like you're just chilling in front of the TV and you jump out of the sofa and you get into your car, you drive to the grocery store, you get in and you don't know why you are there. This is, yeah, you are laughing now. I know you are laughing. Just don't go to the grocery store now. It's fine. I mean, you need to know the reason that you're doing something. And if you don't have a reason to go down to the execution time frame and you start going there thinking you're going to force a trade to satisfy your thoughts, beliefs, and emotions at that time and how you feel or how you want to feel, then you experience only one losing trade, and it's enough to mess up with your beliefs about your abilities as a trader. Guys, I'm trading for 2 whole years. I went through every single thing you can name it on the chart, every single thing, from getting emotionally distracted, from losing a lot of money, for making a lot of money on a trade, for feeling overwhelmed and everything, every single emotion I went through. So I'm calling you, please, just understand what are you doing and why you are trading. We are trading because we want to make money. We need a solid plan and we execute the plan, and simple as that. Okay. Next one, the euro Canadian dollar on the weekly chart, it can be not as good as we want it to be. We have a resistance here, but there are other currency pairs to watch, like the Great British Pound Australian dollars. This one here, the price moved. Guys, is it okay that I'm also, beside of the market analysis, I'm sharing as well my personal experience, and also how can I help you even from this webinar to slowly develop yourself as a successful trader? Is that okay with you? Because if you don't like them and you want only to see, yes, Theo, tell us if this is up or down and that's all, then I can stick to that. Okay, but I think there is much more beyond just to know the direction. You need also to understand how you can make money over the time in trading, not from one single trade. So the price action on the weekly chart, it's a bullish reversal price action with the content of, let's say, uptrend bullish sentiment. So if we go down to the hourly time frame or 4-hour charts, choose whatever you want. Simple stuff like this: higher highs and higher lows, bullish engulfing here, off to go, bullish engulfing there, off to go. This is what we want to see day in, day out. We trade them. If our market, if our analysis suggests that we are looking for long positions and we see the market doing like this, which means in a downtrend, are you going to start trading short? Are you going to sell the market, or are you going to stick to and you're going to trust your analysis? Come on, let me know what you're going to do. Let's say you forecast on your higher time frame that the market is in an uptrend and you want to look throughout the week for long positions. It means to buy the market. If the price action turn on Wednesday and you start making lower highs and lower lows, what would you guys going to do? Would you start saying, okay, now we're going to start moving to the downside? What you going to do? Let me know. At least those who understand the question. Okay, maybe I don't explain it very well, so just feel free to share your opinion. And in trading, there is no right and wrong thing. There is only high probability and low probability setup. This one here, pound Canadian dollar. We said we see a bullish continuation pattern on the weekly chart, but because the price is right at support, we might not gonna rush to trade it. Price, although last week broke above the support strongly, it reaches the support here and gave two opportunities. So yeah, that was a good one. Australian dollar, Canadian dollar, and the rest, I don't see them as good for this week, to be honest. So let's check the gold. My goodness, Theo, finally the gold. Why it took you so long, mate? So short position from the chart to sell. We trade the market, keep buying. Okay, so that question, it makes, the question I asked, it was, the market makes higher highs and higher lows. Sorry, let's say you trade like me, you focus on the hour, on the weekly chart for market analysis, you choose your direction on the weekly chart, and then throughout the week you go on the hourly time frame and you execute. Let's say on the gold last week I was bullish because, okay, let's explain that on the gold market. Last week you were here. We said that uptrend continuation pattern with a strong bullish breakout, it means that the market most likely it's going to keep rallying on the gold. So that was Monday. On the hourly time frame, throughout the week, and I primarily trade during New York trading session. On the hourly time frame, I was mainly focusing to find opportunities within an hourly uptrend. So every signal I had on the hourly time frame, they were defining a downtrend. I wasn't paying attention to the signal because I focused it on my higher time frame and it was bullish. You can see it, right? I mean, this market, is it a bullish or a bearish market? Here, it's a bullish market, right? So, hourly time frame. And to be honest, because the Fed were about to report interest rates, we prefer to look for this kind of stuff in more detail after the Fed report the interest rates. That was the report. Okay, so from Thursday onwards, the Fed had interest rate. How can I be bearish on the gold? It's US dollar, it's XAU against the US dollar. The Feds, they cut interest rates. So if this is going to get weakened, it means the base currency, it's going to get stronger, right? So what I was looking to do is during my trading hours, which means they started during the New York trading session, I was looking to find bullish opportunities. So did I trade this bearish candle? No. This bearish engulfing? No. Was I focusing on this swing low formation within the context of an uptrend? Of course, yes. Then you had during the Asian trading session, I don't know if some of you, maybe you live in that side of the world, you could trade the Asian trading session and be bullish on the gold as well. Now, our traders, they send signals based on the 5-minute chart. And of course, on the 5-minute charts, you're going to see well-defined downtrends. Price makes lower highs and lower lows, and you're going to take short positions. Okay, so you need to understand the time frame you are looking to execute trades. And this is what many traders, they need help to understand very, very well how to utilize the trends on the two time frames. Okay, guys, and honestly, it's worth, if you find yourself struggling with this stuff, let me know, send me a message, any way you prefer, you can communicate with me, and I can help you to at least to understand how to read one time frame and how to interpret it into the lower time frame. Okay, so with the gold next week, the price still, it made a higher high here. What we see though is that the body, the size of this candle, it's smaller than the size of this candle. And this is something tells us about the volume, the tradable volume, the trading activity that took place last week. Although with positive news events for the gold, the price didn't move that much like it moved a couple of weeks ago. So maybe weakness will start. But listen to my words. Maybe weakness will start. We don't have a confirmed price action reversal. If the price will, for 2 days, it will move upwards and then it's going to spike to go downwards, you need to be able to sit with your account equity and balance within this retracement, because maybe you don't use stop losses in the market, which I recommend you to use stop losses in the market. So this is the reality. If we had a reversal price action like a bearish engulfing, I would say, yeah, you have, let's say, 50% retracement on the bullish, on the bearish engulfing, and then we're going to most likely see them move to the downside because, hey, let's face it, it's been a while since this market made a retracement more than the 23.8% of the Fibonacci. So the price is most likely going to start, Jerome, most likely. You are missing two important words in that sentence. Yeah. So this is the fact for the gold, guys. Question, yeah, that was right. Yes, Panayotis, I understand. Happy that you find out that there is something there, the connection. iPhone user said, what time frame is best to execute trade? There is no time frame that is best to execute trade. I'm going to answer this question if you tell me your trading personality, or you tell me how can you interpret it with risk in the market, and also what's your availability. If you tell me I'm available to look at the trades only once, the charts only once a day because I have a full-time job 9 to 5, then if I tell you that the 5-minute chart is the ideal time frame to trade, it's like I'm killing your trading beliefs and thoughts and ideal world, because I used to trade on a daily chart due to my schedule when I first started trading. I used to trade on the 4-hour chart because I needed time to understand the market and the price action. I couldn't trade the 5-minute charts or the 1-minute charts like I can do now, very successfully, I can say. But for me, based on my schedule, it works best to look the hourly time frame. Now, you need to know your trading. You need to know a little bit how you react into the fast or slow price move. Okay, then we're going to define the ideal time frame. It's going to be your ideal time frame, not the market's ideal time frame. Okay. Do I think if gold will go to 2580? 2580. Where is 2580? 2580. Somewhere there. Look, if the gold is going to break to the downside, and we're going to break below this downward trend line, first, we need to clear up these low points here. Okay, now 2580 is somewhere there. Do you have a profit target here? Chris? If the gold comes to this price level, are you buying a new home? For break even? Okay. Jerome 2542 for break even. 42, you are holding it from here, from the Feds. Okay, the Feds reported negative news events. So yeah, Okay. Okay, look, let's all the people on in this webinar, if you want the gold to drop, I mean, let's pray for the gold to drop. What can I say? What can I do for you guys? So, Abdullah, you are very welcome, friend. Next one, US oil. US oil, it's my favorite. Actually, not my favorite. It's just I like volatility in the market. During the New York trading session, the volatility it's immersed, and I love the volatile markets because we get the moves. I want to get into the trade, and by the end of the session, I want either to make 2-1 or to lose the first trade, and that's it. So, and it was a very difficult week for me last week, to be honest, in trading, because the US oil was going pretty much sideways on the hourly time frame. The weekly, it's in a retracement phase, and yeah, it gave me a lot of headache. And I will tell you something, guys, it needs courage in trading when you are wrong to immediately reverse your position. I did it here, and I'm still in a position over there. This one here, it was a bearish engulfing within the content of this downward move. During the New York trading session, it was a trade I took actually. I entered here with a stop loss. Sorry, I entered there with a stop loss above there. Once the market closed, right, 1 hour later, the market closed with a bullish engulfing. Most of the traders, bullish engulfing, it's a reversal price action that signifies that, hey, we are changing direction. We are going long now. And in a strong downtrend, the market wouldn't betray the bearish engulfing. It will have melted. So once I saw that a bearish engulfing turned into a bullish engulfing 1 hour later, and it was just at the beginning of the New York trading session, I said to myself, hey, you are wrong here. Take the loss. It was about 70% of the position. I cut I get out of the position, and immediately I open a long position. So I'm long here now. The trade is still on. I'm not going to say to you that I'm not in the trade and come next week and say, hey, guys, I took this trade. No, I'm taking responsibility for my trading. And I know that most of my trade setups, they are not winning trades, but I make money month after month, year after year, because my reward to risk, it's always in my favor. And unless you start thinking in these terms and act in these terms, you will find it very hard to become a successful trader. Reality, unless you trade on the lower time frames, like on the 5 minutes, 1 minute, 10-minute chart, and you have TP1, TP2, TP3. I don't use TP1, TP2, TP3. I use only TP, and that's it. Okay, because that's the trading style that works for me best. All right, so that's why I'm saying, if you're going to trade the 5-minute chart, and our exceptional traders, when they send the signals on the group, and they do amazing work, they have a totally different approach, because these time frames, they requires different mindset to trade them. Not all time frames, they are trading equal in the markets, and I say that over and over again. So I bought here, my stop loss is down there, price is currently up here. We will see. You will know next week if Theos trade won or lost. Okay, simple as that. What I'm saying about, so this one here, I have a bullish bias until the price is going to reach this area of resistance. I hope it's going to reach it, so it's going to make some good profit for me. If not, let it be. Next trade. What I mean by bearish engulfing, and if they're going to work out, they're going to work out exceptionally well, is like on the DAX 40. That's another instrument I trade a lot. You see, price made a bearish engulfing, and immediately the market melted, and it gave us 2-1. All right, this is what a bearish engulfing price action causes when you trade it in a downtrend. So compare this with the US oil trade I took here within this beginning of a downtrend, let's say, bearish engulfing, and the market didn't follow through. So once I saw bullish engulfing, did I felt uncomfortable? Of course. Did I felt upset? Yes. Did I felt nervous? Yes. Did I felt as every human should be feeling? Absolutely, guys. I'm real with you. A trader that will tell you, hey, I flawlessly do this and I do that, and these are blah, blah, blah nonsense. In trading, we deal with our fears and emotions and frustrations day in, day out. And a good trader, a professional trader like myself and other traders I know, we all admit it and we learn how to live with that. You have to learn how to live with these emotions. You cannot get rid of them. When you hear traders on YouTube saying, I got rid of the fear and I got rid of the euphoria and all this stuff, these are BS. Sorry for my language, but the reality is that you cannot get rid of any emotions you carry as human. You learn how to manage them and how to keep them on the side while you are trading. Okay. Next one, NASDAQ. NASDAQ weekly chart, price made pretty much, it came up to this area of resistance. I believe that we're going to see some kind of reversal price action here. The reason is the price, after this insight, it failed to penetrate the resistance and close above it. The body of this candlestick is very small compared to the body of that candlestick, so it might going to be very low probability setup unless something changes and boom, we're going to see the market moving upwards. Okay, so on the lower time frames, hourly chart, consolidation, I don't understand. Let's see, we need to see the price to break above this area of support at point A, resistance at point A, of this support at point B, and then we're going to judge, but it's not very clear, to be honest, this one. Panayotis asks, is it good to trade on news or it's too risky? Yeah, look, it's too risky if you want to, guys. And I suggest, I used to do that. I don't do it anymore because I'm okay with my trading results. But years ago, I used to have a separate account with just a little bit of money inside, real money, of course, just to satisfy my emotions when it was news and I had a strong belief about an event will occur over the other, and I was just say, okay, I will place a trade here, but you don't want to mix it with your real account because that's what it's gonna create a distraction. Okay. Moses says, I'm holding from 25.86. Are you long or short, Moses? You are welcome, Panayotis. Jerome said some time frames are more equal than other time frames. Yeah, like you see the 1 hour time frame and you see the 30-minute chart, pretty much they have the same information there. It's only one candlestick, only one candlestick separated. So I think that's all from me today, guys. I stretched the webinar more than what we promised to keep you here. I hope you really enjoyed. I want to believe that you find value out of these webinars. I try to do my best, and of course the Elevating Forex Stream does the best on a single week with the trading signals our traders provide for you and everything. So I want to wish to everyone to have a fantastic, a happy week ahead. Manage yourself, your emotions well while trading. The markets, they're going to be moving 24/7. If you miss or you didn't take one setup you wanted to take, it's going to be always another setup. Just be calm, be real to yourself. Don't try to prove anything to anyone. In the market, it's only you against you and you with you. That's all. End of story. Okay. Happy trading to everyone. Have a blessed week ahead, a fantastic week ahead. I wish you to have a successful trading week, and I definitely look forward to see you again next Sunday on this webinar. Thank you so much. Bye, everyone.